intro to the Danos group. As many as you know, we are a compliance, financial crime, legal and risk staffing firm. We've got offices in London, which cover the whole of the EMEA, offices in Hong Kong and Singapore, covering the whole of the APAC region, and offices in New York, covering the Americas. We have 3 businesses across these offices and practices. We have Danos Search, which is the senior high-end retained search business, Danos Associates, which is the mid to senior level contingency firm, and Danos Consulting, which is our staff augmentation, interim, bench support and consulting services business. We're currently seeing a really active market. I've run the Danos group for 17 years. I don't think I've ever seen it this busy. I think we're seeing a lot of clients suffering from very high attrition numbers. To give you an idea, normal firms would expect to be running at between 8 to 11% annual attrition, but many firms, particularly some of the larger organizations, are seeing attrition numbers as high as 22%. And that's really a key indicator of a very high demand market. In line with this, I think many of you will be probably quite happy to hear comp expectations for the current year are expecting to rise. I think this is really on the back of obviously positive annual returns for a lot of the firms, and obviously organizations trying to reduce attrition numbers. So that's kind of positive news, hopefully, for some of you. If you would like to discuss career opportunities or get the necessary intel and data points on the market, please don't hesitate to reach out. Anyway, enough of me. I'm going to pass over to our first speaker, David Churton. David is Managing Director, Global Head of Oversight for Morgan Stanley's Compliance and Financial Crimes divisions. David, if you could just do a bit of a brief intro in terms of yourself and your career history, and then David's going to be talking about data and how we make the most of data and career paths. Over to you, David.
Brilliant. Thanks very much, Dominic, and hello, everyone. So yes, as Dominic explained, my current role is to look after our monitoring and testing programs globally for compliance and GFC. But I started quite a long way away from that, so I thought it might be worth giving it a minute of a sort of potted history and how I got there, and if there's any thoughts I've got that may be useful for people. So I started in investment banking, working on an electronic trading desk, providing coverage for them, which was fantastic. I was on the trading floor, felt very much part of the team, although of course with a sort of independent challenge mandate, and that was great for me, but gave me really good sort of exposure to the actual plumbing of a bank and the sort of the business operating models, how actually business was being done. I then moved from that role and did various roles across equities, covering different areas, as well as across what was called equity capital markets there, and covering different businesses, and ultimately that led to me taking on an equities compliance team, which at the time used to sort of encompass all of the sort of central, what are now seen as more central functions, like the surveillance sort of teams. We put in place some surveillance focusing on the equities businesses, as well as training programs, policy programs, etc. I thought I'd just mention all of that sort of movement just to highlight that I do think for people as they're building their careers, having the opportunity to sort of see different aspects of their organization, I think is incredibly useful. Gives you really good, helps you build a network, but gives you really good sort of perspectives on how the business is really operating. I think that's really important if you're able to get that exposure over time. I then moved, I moved firm, courtesy of Dominic Danos, from where I was at Lehman Brothers to Morgan Stanley, to take on a slightly wider remit, focusing on sales and trading as a whole. So to up to that point, the majority of my focus had been on the equity side. And again, that's really interesting. Lots of transferable sort of experience and skills, but equally, the interest of learning new things, be exposure to different areas. And within our sort of EMEA compliance department here, I ended up being the head of EMEA compliance. And then as sort of things have changed over time, I ended up working for the global head of compliance based in New York, effectively focusing on various different initiatives and programs that we wanted to either establish or build out over time. One of the areas that I focused on was actually on our surveillance programs, and that's ultimately led to me taking on this sort of monitoring and testing oversight role. So again, as a quick potted history, I thought as a sort of a key challenge, one that I would pick up on, as Dominic mentioned, was around how we make the most of the data available to us. And I think it's a topical subject. This morning, I listened to a talk from Claire Cole, who's the Director of Market Oversight at the FCA, who was talking in terms of the FCA seeing itself as a data-led regulator. And she was talking about the investments that the FCA were making in terms of being able to manage the massive amounts of data that come through the regulator, and how they can assess that and analyze that in order to be able to meet their market objectives. And I think there's definitely a corollary on all firms, I think, around the same challenge, which is there's a huge amount of data available to us. And I think there's a need to work out how best to harness that in a number of different areas. So my sort of breakdown of those areas is as follows. First of all, I was thinking about how do you make certain that data is available in an effective way to people as they go about their roles within compliance and financial crime. And from an oversight perspective, that could mean if you have a surveillance analyst who gets an alert which is identifying a certain bit of trading activity, what tools do they need in order to be able to efficiently do their job? What data do you want to be bringing to their fingertips? Whether that's sort of on a comms side for them to be able to follow up to see what was happening and the context of the time the trade was happening, whether that's to do with market data, what was happening within order books. And we invest a lot of money in the tools that we provide to people who are conducting oversight work in order to make them productive and have the data available to them that they might need. That was my first one. So second one was about how we make the most of data in terms of prioritizing areas of focus for compliance and GFC. So we've been working a lot with our data analytics colleagues in terms of bringing together the output of various different control processes and things like follow the money type data, looking at performances against budget, and bringing all of that information together to be able to sort of continuously challenge ourselves. Well, what are the areas that we want to focus in, whether that's from a risk perspective, whether that's at the desk, whether that's particular employees or clients, and that's something that we're very focused on, both in terms of the pipes and plumbing of bringing those metrics together, but also the governance within which we can sort of prioritize our oversight activities over time. Another sort of perspective on making the most of the data, I think, is how you can bring data together from a risk identification perspective. So not so much at the macro level I was just talking about in terms of areas that you might want to sort of focus your oversight activities in, but actually if you were to bring together the output of different control processes, might that alert you to a potential issue with an employee or a particular desk that you want to, deep sort of drill further into? And that sort of holistic, integrated surveillance is, again, an area that we've been challenging ourselves and working with the first line and the third line in terms of improving our capabilities at Morgan Stanley. Another aspect on the data is particularly for the surveillance programs, where I think all of us are challenged with how do we, I'm just looking at the time, Dominic, keep me honest if I go too long, but how we optimize our surveillance activities, recognizing the sort of the productivity levels that we are faced with, and making certain that, you know, the surveillance analysts are spending their time in the areas which really sort of reflect the greatest risk. And so we're trying to use the data coming out of our surveillance programs to be able to feed back into optimization efforts, either through data analytics or further down the line getting into machine learning, to be able to improve that productivity. And so that will be another big priority for us as we continue to look to optimize the very substantial surveillance programs that we currently have. Another side on the data front is all of the management reporting and sort of how that allows us to engage with the business unit, and coming up with a strategy for how we bring together the metrics that we produce from different types of activities and present them in a meaningful way that allows us to have a good dialogue with the business is another very important area of focus in this space. And finally, my last point was going to be, well, what does this mean in terms of the people? And increasingly, where we're hiring, we're thinking about have we got people who are comfortable with the sort of data analysis, data analytics, the sort of familiarity with different types of technologies and ability to be able to work with partners in data analytics and technology. And so those are sort of becoming increasingly important skills when we're going to the marketplace. And also when we look internally, we've got various sort of training and education initiatives where we are looking to upskill people in those areas with various providers, which is working really well, as we absolutely see the importance of those skills as we try to tackle that big data challenge. Dominic, that was what I was going to cover.
Spot on, David. Thank you very much. Excellent timing. And David, thank you very much for that. Really fantastic insight. Many thanks. So next up, we've got Nita Patel. Nita is MD, Chief Compliance Officer at Credit Suisse for the UK and EMEA. And Anita as well is going to give a kind of quick intro and career background, and then talk about compliance programs in the new working environments, and some information on, you know, the role of compliance within global organizations. Over to you.
Thank you, Dominic. So hello to everyone and thanks for joining. In terms of a little bit of background on me, so as Dominic just mentioned, I'm currently at Credit Suisse. And in fact, I've only been here around 6 months. Prior to joining Credit Suisse, I was fortunate enough to work in a number of different financial services organisations for around 25 years across a broad range of organisations, both on the buy side and the sell side, covering various regions. And of those 25 years, I'd say 22 have been in compliance across Nomura, Goldman Sachs and Credit Suisse, of course. So just turning to the topic of the day and the challenges of running a compliance program at this time, I'd say there are 3 things that came to mind for me. One was managing compliance, the compliance program holistically and staffing in the new hybrid environment. Secondly, the use of strategic locations and achieving balance. And then thirdly, the role of compliance within organisations and achieving a balance of global consistency versus legal entity compliance. So if we look at each of those in turn, in terms of the first one, which was the hybrid working environment, which is what it's often termed now, I'd say that there are a number of things to balance here. Maintaining an effective compliance program, of course, but ultimately making sure that your controls remain fit for purpose. Given the increase in work from home environments, making sure that you're able to continue to embed culture across the organisation, that you don't lose the benefits and learning that we all get from collaboration and live interaction with the personal needs of your team, and also, you know, mental health as well. I think from a compliance control environment perspective, the added complexity comes from a combination of changes and advancements in technology more broadly, the desire of more people to work from home, and the rules that we're subject to here particularly being more principle-based. So, for example, generally regulations that our firms are subject to were drafted before WhatsApp was really a thing and before most people accessed their work emails on their personal devices. And so in the new world, aside from having policies, procedures and training, how do you make sure that people aren't misusing the information that they have access to or breaking rules by taking screenshots or photos of sensitive information or using WhatsApp to communicate with clients? And practically, how do we get comfortable that our controls remain fit for purpose in the absence of clear regulatory guidelines, increasing privacy rules and the like? So it becomes quite complicated at a practical level. I think more broadly, when you have a hybrid working environment, your managers and their leadership skills become increasingly important. And here I think it's important that firms make sure that, that their managers are not just technical managers, but really are good leaders and managers who can effectively oversee and manage their people, regardless of where they're located and working from on the day. And then finally on this point, many of you will have seen the recent FCA paper on hybrid working, which really was just a reminder that firms need to be cognizant of their control environments and making sure that they remain fit for purpose. There was an element of the paper that talked a little bit about the FCA's powers to visit any place of work, which includes people's homes, which I think frightened people a little bit, but I don't believe that's new regulation per se. It was just a reminder from the FCA. Moving on to the second challenge that I wanted to talk about today. So over the last 5 to 10 years, firms have been increasingly using strategic locations, usually as part of broad cost-saving initiatives. And one of the core challenges for any compliance team who is making use of these locations is to achieve an effective balance between using the locations, cost efficiency, and making sure that compliance teams maintain connectivity with the businesses that they're effectively overseeing, so that you don't end up in a situation where the compliance function becomes a tick box function because they don't really have that day-to-day dialogue with the business. I'd also add that in order to be a real success with these initiatives, the firms really do need to think about how they make sure that they embed culture within all of the locations, how they deal with the varied labour laws, how they prepare for the fact that over time other firms will set up in the same jurisdiction, and so inevitably the cost benefit that you had at the beginning starts to go away. And then firms really do need to allow for some form of travel budget to maintain connectivity across offices, and sometimes, you know, firms lose sight of all of those other things in an effort to kind of cut initial cost. So I think on strategic locations, they may not always end up being the cost efficient and most control effective approach, but can be used for certain types of functions within the compliance organisation. And then, so finally, moving to the third challenge in running a compliance programme at the moment for global organisations, I would say that the need to balance global consistency with local legal entity needs is an increasing challenge. So all of the organisations that I've had the benefit of working for have been large-scale global organisations, but in very different ways. And there's definitely benefit and importance in making sure that firms maintain global minimum standards, but oftentimes this can be difficult in practice where the higher regulatory standard isn't necessarily in the kind of head office location, which generally drives the standards, or in times where regulatory expectations are diverging, which we've seen increasingly over the last number of years. We continue to see regulators, particularly in the UK and Europe, expecting oversight and therefore risk assessment metrics and governance to be at the legal entity level rather than the global business level. And the reason why I think that's challenging is that, you know, generally large global organisations don't view themselves as legal entities, they view themselves as divisions. And the challenge really is trying to bifurcate the metrics and the information you need and the risk assessments and the way you think about things from a legal entity lens, which often will be fairly different to looking at it at a global level. And then there are costs associated with trying to implement that in terms of technology, making sure you can tag things to a legal entity and pull data as and when you need to. In some organisations, on top of that, businesses are run globally rather than just regionally, which often adds another layer of complexity. With that said, I do think that firms are moving the needle in this space, primarily I think because of pressure from regulators and legal entity boards who are requiring information to be relevant for them and the legal entities that they're responsible for. That was all I was going to cover, so back to you, Dominic.
Fantastic, Nita. Thank you very much again for that really interesting insight. And then our third panelist is Kate Squire. Kate is Managing Director, Global Head of Compliance and Business Operational Risk at Man Group. Again, Kate's going to give us a brief career background, and Kate's going to be talking about SMCR and operational resilience. Over to you, Kate.
Brilliant. Thank you so much, Dominic, and good afternoon, everyone. So I'll be brief in terms of my background. As Dominic mentioned, at the moment, I'm currently Global Head of Compliance and Business Operational Risk and Resilience. Yes, the title's quite a mouthful. The job is quite full on too. I joined Man Group in 2015. Prior to that, I spent about 16 years as a Managing Director in the investment banking division of Barclays. I led coverage across a number of different areas. Really interesting listening to David. Actually, I think the banks do move you around and get you to do lots of different things, which is fantastic for kind of experience building. While at Barclays, I was based in London and also New York. When I was in New York, I was very privileged to work on some of the Dodd-Frank implementation. I went there at just the right time in 2011. Post enactment, post the global financial crisis. So it just gave me really great global experience. Anyway, as Dominic mentioned, I'm going to talk on what I view as quite interrelated topics, actually. So the senior managers regime and also operational resilience. Both of those topics I'm going to tackle through the lens of a chief compliance officer and sort of through the compliance angle. And frankly, from a more practical perspective, I think everyone on this call probably knows all the rules and the various citations, etc. And so I just want to sort of get a bit real and give a bit of a 101 guide in terms of how I tackle things and how I've seen others tackle things successfully. So on SMCR, what's the role of the Chief Compliance Officer, the SM16? I'd say it's fairly multifarious, actually. You're one of the sets of eyes and ears and an independent challenge for your organisation. No, I say only one. It's definitely got to be a team effort. You're not the kind of sole person there. But at its most difficult, you may be the lone ranger in the room. You're the person on the opposite side of the table from everyone else, perhaps with a different viewpoint and often quite a valid viewpoint. That said, when it works really well and at its very best, you're a real guardian of the firm's operational resilience. You're seeking to ensure the firm's systems and controls are really robust and fit for purpose for your clients. So, I mean, it's a fantastic role. It can obviously be super challenging. How do you do it effectively? Well, as I said, we all know the rules. We know about reasonable steps, etc. But in terms of showing my 101, let me share some tips. As a compliance officer, over the years, I'm often asked by the various boards that I sit on or attend, what gives you sleepless nights? I find it's a really interesting question. It somewhat perturbs me because I think actually the very best compliance officers don't have sleepless nights, or at least one wouldn't perceive that they did when you view them in the office. Actually, they're usually the calm person in the room. They're the calming influence in the room. And I think that's what everyone should know, not just as a chief compliance officer, but just the compliance officer in the room, the advisory compliance officer, the surveillance compliance officer. You'll be the person in the room that everyone's looking to. They look to see your reaction. And if you don't stay calm, I promise you temperatures rise all over the place. So I think it's really about being that swan on the top of the water, gliding along. You may be dealing with multiple things, you will be dealing with multiple things, but actually being that calm person in the room, the person people can rely on, the people have confidence in turning to. Also, I think at the heart of being a really good compliance officer is really relational. It's about being really approachable, not being the police. If people don't feel comfortable escalating or discussing things with you, they frankly won't. And you won't have any chance of really understanding what's going on in your organisation and effectively managing the risk. So it's really important, open door, be super approachable, and actually react really well. I think it's that calm influence again, which will allow people to feel comfortable coming to talk to you. Now, I know this sounds all really negative, like bad things happen all the time. Look, I'm a compliance officer. I've been a compliance officer for well over 2 decades, and I am a natural pessimist. I definitely always look to the bad. I think probably most of those who serve in compliance on the call probably do the same thing. But I honestly believe that if you are trying to prevent something bad happening in a really systematic, controlled way, a lot of good will come out of that. You'll have really enhanced systems and controls, processes, clear routes of escalation. It's actually a really good way of making an organisation a good place. So that's the kind of the scene setting, but on a day-to-day basis, what does it mean? What do you have to do? Well, I said it's relational. It absolutely is. You need to spend a lot of time with people. I'll talk a little bit about data later, and David did touch upon lots of the reasons why data is really important, and I wouldn't discount it. But you need to spend time with people. You need to set aside time to spend with people, both formal time, informal time. You need to have a really strong documented framework and a really strong audit trail. Actually, you want to be robust in being able to demonstrate what you've done in the senior managers regime. There's also a tone from the top, and it's interesting that Nita talked about not being in the same jurisdiction as people. I mean, I think most of us work at global firms or firms that are spread across a number of offices. But I think it's really important that both the Chief Compliance Officer and the compliance team set an example. They need to set an example for you yourself as Chief Compliance Officer, for your team, for your peers, and actually for the other SMs. I remember when we were introducing SMCR at Man Group, it was actually really important as the compliance officer that I was getting things right, because I'm not sure how I expected my peers to get it right if I wasn't myself. And you really are a cultural barometer for your firm. So what you do, how you do it, and how you relate to people, I think really is very, very important. And I think that speaks to the whole function. So it's relational, but who should you meet? There's the obvious. You should spend lots of time with your direct reports. You should have clear delegation lines and delegate effectively. But you also need to meet with the other senior managers and other individuals across the firm. But actually, it's not just about who you meet, but it's what you do in those meetings. I would say it's about behaviour again, but make sure you listen. And when I say listen, I mean really listen, don't just talk. That's how you will actually pick up what is going on in your firm at the time. Allow people to talk to you. Be comfortable with the uncomfortable silences, because you will get information through them. It's really, really important. By way of example, I meet with our head of internal audit every week. Now, it's obvious, you know, we can share observations, we can check and balance each other. The second, third, first line is all really important. But actually, I look at it a slightly different way as well. As control functions, we are more powerful when we're working together. Essentially, through those meetings, I'm doubling and trebling the size of my team. Sharing insights in MI can actually be as effective as directly sharing resource. So we have different data points, we've got different insights. They create a bigger and more fulsome picture of what's going on in the firm. So then, as SM16, you'll obviously be likely and your delegates on a lot of the firm's governance committees. Again, really important. Obviously, you need to attend them, but I would say again, be really present. By present, I don't mean you have to be in the room. Obviously, a lot of us are working virtually at the moment, but be engaged, listen, challenge, be a place in the room. People will observe how you behave and how you challenge, and I think that's really important. Anyway, enough on the relations and on to data. David spent a lot of time talking about what is a lot of important data. A lot is about data. I mean, I often get criticised or critiqued that Kate always wants the data points. It's probably not a hugely bad thing. I don't know how well people know Man, but it's a firm that a large percentage of our AUM is actually quantitative. And so data's our business. Data is good. But joking aside, I want data for a really good reason, but not just any data. It's not about pretty PowerPoints and MI. The data behind good MI needs to be high quality and fit for purpose. So I always ask myself a bit of an exam question when I'm putting together MI for myself, or actually for any of the committees or the boards that I serve. And that exam question is, you know, what am I trying to get out of this? What am I trying to answer? And also, what data do I need to derive in order to answer that question? And it's not a maths exam, actually. This exam question is not all quantitative. Qualitative data counts, and it counts hugely. It's also important that your MI is viewed over time. This way you'll easily spot trends. If you start seeing data over 1 month, 2 month, 3 month, 6 month periods, you can start seeing, and I'm sure many of us saw trends during the pandemic in terms of how people were connecting with each other. Obviously, a lot moved to email from phone. Relations were very different. Seeing those trends year on year is really helpful to spot issues. But I think when you refine data as well, make sure that you're improving it, look for different data sources, but make sure you're comparing apples with apples in terms of data sources. People often fall foul by refining their data and then not realizing the data they're looking is markedly different to what they may have been looking at 6-12 months ago. What about qualitative data? So that's kind of obvious on the quantitative and the sort of numbers game. In my experience, most issues are down to human failure. It may not be nefarious, but it happens. And frankly, it's more often than not a people thing when something goes wrong. Sometimes the individual who's coming in a little late, looking a little tired, behaving out of character can be as useful a data point as the multiple errors on the trading desk, unusual trading patterns, increased risk taking, individuals starting to email different people, etc. I would say as a compliance officer, your instinct counts. It may not always be right, but do look into it. I'm always quite happy when I prove the negative. It's one of the better outcomes I typically have in my days. And you shouldn't underestimate actually through that process what you learn. As an SM, don't let things lie. Trust your instincts and don't explain things away. And the other huge tip is please follow up. So many things have gone wrong in our industry when a senior manager or someone leading an organization has been really diligent initially and then actually hasn't followed up afterwards. And you know, it's a big team effort. I talked about my meetings with my head of internal audit. I've always found, particularly in previous roles at large scale, you know, banks and during banking investigations, it often became really evident that it's only when everyone was sitting in the room and talking to each other that issues began emerging. So an employee or a system that was concerned to an individual head of department was often less of a red flag than when you talk about it and you realise actually it's the head of compliance, the head of risk, the head of legal, the head of sales all have issues, albeit slightly different, but with the same individual or system. I would really say as a compliance officer, talking is your friend. So be relational, be candid, share wisely, and by sharing those observations, you'll give yourself a lot of eyes on your organisation that are not just your own. They'll have different perspectives. Anyway, moving quickly on to operational resilience, and they are really interrelated. First thing I would say is I was thrilled when the regulation got published and the consultation. It made really pleasant reading. I'll be honest, as a compliance officer, I don't mind reading regulation. I'm sure many on the call would agree with that. But it's not always terribly enjoyable to read, and it's not always terribly enjoyable to convince your business it's a really good idea. However, I think the operational resilience regs just they just make good commercial sense at their core. They are commercially sensible, they're commercially enhancing. So what do they mean? I guess gone are the days when, as a firm, we basically close our eyes and ears and say it's not going to happen to us. That sort of old school methodology of calculating probability of a risk materializing. It's a low likelihood, it's obviously not going to happen to my firm, it only happens to 1% of the firm. I mean, obviously we can see now it was obviously a deeply naive approach. The new mantra is very much assume it will happen, and when it does, make sure you know what you're going to do about it, and how well you're going to do that. Bluntly, are you quick enough and are you good enough? It's about knowing your landscape. What does your firm's topography look like? And by that I mean people, systems, but not in isolation. Again, it's about that triangulation. It's about codependencies and interplay between the people and systems. It's about knowing your playbook in a crisis. It's again about being that swan as a compliance officer. You will be a lot more calm and collected if you've got a clear playbook as to how you deal with issues. And then it's all about testing. And David, this will probably be music to your ears, having talked about the sort of surveillance and testing program. It's about testing your assumptions. It's about testing your systems. It's about testing your people. It's about uncovering those areas that are actually covered in Band-Aid, sticking plaster and blue tack. It's actually making sure that if things go wrong, you can fix things quickly. So I would say in summary, operational resilience, tests will cost you time and money. You need to put the effort into your program. You need to develop a really strong framework. But in real terms, it will save you a lot of money. Issues can be really costly, not just in real money terms, but also reputationally. We've all seen that. It's a complete mind shift change, I would say. It's very much a move from a more inward focused perspective and looking outward to our clients and a market lens of what resilience look like. And it's definitely a shift from a focus on individuals and systems, but actually understanding the whole ecosystem of the firm. It's a bit of a challenge, but actually you will know your firm better. And when I say they're interrelated, it plays right back into that senior manager card. If you understand your firm, you will actually be able to support it better. Anyway, I think I'm probably over time, so thank you.
Fantastic, Kate, really appreciate that. Thank you very much again for that. We'll move straight into a few questions that came in previously. First of all, and I'll put this to David initially. David, obviously we're seeing in the market the biggest growth demand sector, I suppose, alongside financial crime, of course, is surveillance and people with that relevant skill set. The talent pool in surveillance is obviously growing very fast, but it's not that deep. Do you feel, running a global surveillance program, that there is a particularly strong background to be able to come in and take on, well, you know, mid to senior level surveillance type positions?
Yeah, so I think interestingly, as these surveillance programs become more substantial, it does provide a sort of variety of opportunities for people, and so it's great. We need people, everything from a spectrum of the ones on the technical end of the sort of experience that can help us to sort of with the next evolution of how we're doing our surveillance, all the way through to people who don't need to necessarily be sort of technical subject matter experts, but are really good, say, project managers who can help us with the whole variety of initiatives we're doing in the surveillance space. And so I think there's more opportunity for a diversity of talent in surveillance than there ever was. And I think there's more interesting roles as those programs become more substantial. So I think that whereas before, if you come up, say, an advisory line and you were thinking, oh, you know, would I go into one of these central, what you might think of as central process roles, actually now the opportunities in there in terms of managing big teams, dealing with teams sort of based in, say, that like in sort of offshore type locations, working on sort of strategies, medium and long term, and how you facilitate them with technology, I think it becomes a really interesting opportunity for people. And so I think actually from a background perspective, there's a lot that you can build on. So I don't think people should be ruling themselves out for those type of roles, but rather I think if they have an interest, they can probably build on a lot of different types of experience to take on pretty good roles in that space.
Fantastic, thank you for that. And then the next question that we've got is around obviously something very topical in relation to kind of ESG and the climate change agenda. So I'm going to throw this one at Nita, and really just to, obviously I appreciate that you're the CCO for Credit Suisse. Do you see that being at the forefront of decision-making focus within a firm, you know, top-tier organizations such as Credit Suisse?
Actually, I do. As I said, I've only been here 6 months, but I've actually been quite impressed with how much work they have done in the ESG and sustainability space. You know, we have a centralized sustainability business area who look at metrics, who look at, you know, to the best of our abilities, how do we really figure out what meets ESG criteria, what doesn't. We also have a compliance team focused solely on ESG, which actually is pretty impressive, rather than existing compliance officers trying to tag it onto their day job, because it is a very specialist skill. We're spending a lot of time thinking about sustainability and ESG, whether it's, you know, when we do transactions, when we consider reputational risk, it's a core factor that's factored in. And then as an organisation, we're really starting to think about our sustainability footprint, our carbon usage, all of that. But it feels like we're really trying to do the right thing and move the needle. So I've actually been really, really impressed with the effort it's made. I think the challenge is that the ESG and sustainability industry is still evolving. You know, definitions, criteria, data isn't always out there. So it's not that we will get it 100% right, but we certainly have been throwing bodies and technology to try to do the best we can with what we know today.
Fantastic, thank you very much. And then just the last question I think we've got time to fit in, which I'll put to Kate. Kate, in terms of obviously everything that's, you talked about operational resilience, we obviously had this kind of 18-month COVID period. I mean, what are the key takeouts you've taken in terms of the effect from a personnel capacity that's had on operational resilience?
Yes, I think it's really critical to sort of monitor kind of each aspect. I think as firms, we've spent years monitoring how our systems are working and rather less on our key staff. The pandemic was a huge playbook test, frankly, in terms of how we should do that. It's about sort of flexibility. I think it's also bluntly about digitizing things more. So we're slightly more reliant on technology rather than individuals pressing buttons everywhere. I mean, we are still obviously full-blown in the pandemic. I think, broadly speaking, many firms have been extremely resilient, but people are tired now as well. And you sort of talked earlier about the amount of movement that's going on in the industry. It's very interesting from a resilience perspective, joining firms when they are virtual. Or not everyone's in the office. So in terms of degradation of resilience, is it a little about people not knowing the firm, not knowing what they have to do as well? So, you know, not knowing that playbook. So I think it's challenging. I think BCM has changed massively, and it's become about resilience, actually. I'm unfortunately sad to say I'm not sure this is going to be the last pandemic that we suffer globally. So
thank you, guys. Just wanted to obviously say thank you so much. I think we've run out of time. If there's any other questions that people have got for our fantastic speakers, please email us at info@thedanosgroup.com, and then we can obviously kind of pass on accordingly. As well, obviously, if there's anything you wanted to talk about in relation to, you know, compliance, financial crime, legal, or risk from a recruitment and staffing perspective, please don't hesitate to get in touch. And just finally, I obviously just say a huge thank you to our panelists, David, Nita and Kate. Really do appreciate the time, giving out your time and fantastic insight you've given us. And obviously, thanks very much to everybody for joining. We hope you found the discussion useful and hope to welcome you back in the future. Many thanks. Have a good rest of the day.